Now let's bring on board the management of GNA Axles. This is one counter that has done extremely well, especially after it delivered a stellar set of numbers in the third quarter. We had flagged this off, by the way, and our ET now earnings dhamaka as well. A sharp surge in the counter is what we witnessed. Just to sort of remind our viewers, the company operates in the niche auto ancillary segment. It's a leading manufacturer in the rear axle, shaft and spindle, which is used in light and heavy commercial vehicles. It has a domestic market share of more than 60%. Revenue growth was 29%, margins spiked by more than 600 basis points, and the profits trebled from the corresponding quarter. Mr. Ranbir Singh, the President and CEO of GNA Axles, joins us now on the show. So, Mr. Singh, great set of numbers. Congratulations on that. Your PAT has trebled. Tell us what exactly led to this this excellent set of numbers.
Vani, good afternoon. First of all, thanks a lot for inviting me today. Actually, Q3 performance has improved a lot because of our valuable customers. As you know, companies are depending upon different geography locations like Asia, North America, South America, and Europe. Basically, all the across the geography, the demand was very strong. And our internal team, manufacturing team, they have performed well, and we were able to deliver the goods. So our Q3 performance, top line and bottom line, has improved a lot. Except the domestic CV segment, I would like to give you more information about the off-highway and tractor segment. And immediately after lockdown and post-COVID, this Q1 situation, tractor market has extremely performed well. So where we are having more than 60 to 65% share in our product line.
Mr. Singh, I'd like to talk about the margins. Yes, there has been a great spike when we compare year on year. But if I have to compare it with the September quarter, it has dropped a little bit. Are you seeing inflation pressures on raw materials? Will that sort of cap your EBITDA margins going forward?
Vani, actually, as you know, in steel prices, the inflation is, there's a big increase. Large increase in the steel prices, especially in Q3. Some effect was there, but in Q4 it is going to affect slightly more because in Q3 and 4 total increase in the steel prices is in the tune of 15 to 20%, which is affecting the margins.
Right. More than that, is the availability of raw material proper? Is that something which you're seeing right now?
Pankaj, actually, with our customers, we have long-term contracts like 5 to 6 years. Similarly, we have back-to-back understanding with our key suppliers. So they have to, or they are supporting us and they are giving us as per our requirement.
Right. So I just also wanted to understand about the demand. When the prices go up, do you think the demand tends to be higher and that's why passing on is not that difficult as it is, when things are not looking that great?
Actually, in our contracts, it is a quarterly adjustment of the steel-based price and surcharge of the scrap surcharge. So after, with a lag of 1 quarter or slightly more, it is sooner or later it is implemented, but sometimes it affects that particular quarter. The margins are affected in that particular quarter. Because of long-term relations, we cannot stop or we cannot reduce our supplies. So we have to maintain long-term relations with our customers.
Well, Mr. Singh, we leave it at that. Thank you so much for joining us today on ET Now to speak on your numbers. And we wish you all the very best for the forthcoming quarters and, of course, the new financial year as well.
Thank you very much.